Hi there, it's Ryan G. Wright from DoHardMoney.com, coming to you with a Just Ask Ryan question of the day. And today's question is, can I still buy a house if I've got a bankruptcy? If you've got a question of the day you'd like me to answer, please go ahead, type it in the comments below, and I'd be more than happy to answer your question if you're selected as the question of the day and answer that question for you. It could be about real estate, it could be about investing, real estate investing, personal finance, whatever the question is, type it in the comments below and I'd love to answer it. So to answer this question with bankruptcies, if you're going to get a traditional loan, you're going to go down to Chase or Bank of America or Wells Fargo, whatever the case is, and you walk in there and say, I've got a bankruptcy, they're going to say, I'm sorry, we can't help you, which is typically the case. Now, it depends on the bankruptcy. There's two types of bankruptcies for an individual. There's a Chapter 7 and a Chapter 13. A Chapter 7 bankruptcy basically means you didn't pay anybody back and you don't have to. There's a typical waiting period on that about 2 years after that bankruptcy is over and completed before you can get a new loan. And the best type of loan, if you're a homeowner wanting to buy, is going to be an FHA loan in most cases. The other type of bankruptcy is a Chapter 13. A Chapter 13 is a reorganization where basically what you're doing is saying, I can't pay you everything I owe, so we'll pay you partially. And the court says that's good. And once your payments are done, then you're done with that, and the bankruptcy is discharged or dismissed. So that's what's happening on that. Typical waiting period on that is a couple years as well. So if you're wanting to do that, you're gonna have a hard time getting a traditional loan. The other question is going to be a hard money loan. For us as a hard money lender, you can't be in an active bankruptcy, which means if you're making payments on Chapter 13, you can't get it. But if you've done making payments and there's a little bit of a waiting period, or it's been dismissed, or your Chapter 7's over, as long as it can't be opened back up again, there's a waiting period there, then you can actually qualify to get a hard money loan. So it's not gonna be as stringent as what you're dealing with when you're going to a traditional bank. However, there's another strategy that's not talked about quite frequently in getting a property to avoid the wait period. Now, you can't do this when you're in the middle of the bankruptcy, but you could do this after the bankruptcy's been completed, and this is buying properties subject to, where the idea is you go to a seller that's wanting to sell and say, I'll pay you more money than other people are willing to, but what I want you to do is sell me the property with the existing financing in place. So the idea is if they already owe money, you'll take over those payments and then you'll make a monthly payment to them or agree to pay them on the back end. This can be a great way of getting a property even if you have had a bankruptcy in the past and you're not able to qualify for traditional financing or you're not able to get hard money. So this is a great way that you can look at it, but you're typically going to need to have your bankruptcy completed on the payments, so you don't have that. So some things to think about. Another thing that you should be considering is partnering. This happens quite a bit in business. Somebody's got great credit and somebody's got the drive and motivation. They do a partnership. So you could do a joint venture where you have somebody that's got great credit, that's able to get a loan, that they're the ones that are coming as the credit partner and you're coming on as the partner that's going to be doing all the work, and you guys form a legitimate partnership. Now that can be done in a few ways. It can be a formalized partnership where you say, hey, I'll take 50%, you get 50%, you put up the money, I put up the time. That could be something that works for everybody. Or it could be a deal by deal partnership where it says, hey, I'll give you the first 8% of profit and then we'll split 50-50. So there's a variety of different ways. We have some business partner essentials for those of you that are members that you can check out as well. I hope that you've enjoyed this video, this question of the day. If you've got a question of the day you'd like me to answer, type it in the comments below. And if you like this, please give me a thumbs up. Hit the thumbs up button on this video and let me know this was helpful and that you liked it. I got a couple of other videos that I really think you should check out. One of them is the downside to FHA loans. This isn't talked about a lot. Some of the downside to FHA loans, check that one out. And then how to find financial freedom is another video that we've put together here. I know you're going to enjoy both of those. Now, if you want help in real estate investing, if you want help finding good properties, if you want help with knowing what's a good deal, what's not a good deal, if you need money for some of your real estate investment projects, check us out over at DoHardMoney.com. We may be a good fit for each other. Love to talk about that and see if we are. Check us out over at DoHardMoney.com. Otherwise, make it a very profitable day and bye for now.